Hello and welcome to this video on my channel. My name is Busi and today I'm talking about the process of buying a home in Canada. Now, we recently purchased our first home in Canada. If you're not following me on Instagram, this is probably news to you. And I just thought I could take you through the process to help you prepare if that's something that you want to do in Canada as maybe a newcomer or just a first-time home buyer in general. So I have my notes down here, so if you see me look down here and there, that's what I'm looking at. And I just want to make this absolutely clear as a disclaimer. I'm not a broker, I'm not a financial advisor, I'm not a professional advisor on any level with anything that I'm going to be sharing on this video. This is purely based on what I've learned going through the experience, and that's what I'm sharing with you today. Jumping right into the first point, what you need to know before you even start the shopping experience. So number one, you need to know what you qualify for so you can narrow down your search, because there's so many houses that exist in very different brackets in terms of price. So when you know how much you can afford and how much you actually want to spend, that's going to help your search and narrow it down a little bit. So there's a couple of ways that you can figure this out. There are online calculators that exist, but I really wouldn't say use an online calculator and then take that number and start shopping for a home as if that's exactly what you would qualify for, because the online calculators are generally just asking for your household income and then the down payment that you put down, and they spit out a number. They're not looking at your unique financial situation. They don't take your credit score into consideration. There's a lot of things that the online calculators just don't do. But if you are curious to just get a very rough estimate that is very likely going to be off based on the fact that they're only looking at your income and the down payment you say you would put in, your other option is going directly to your bank. So you have a bank that you use to maybe get your salary, or if you're self-employed, that's where your money is coming into. You can go to that bank and speak to them on getting a mortgage. That's another option. And then the third option, which is my personal preferred option, is using a broker. So should you be using a broker or should you use a bank? It's really up to you. Personally, as I mentioned, I prefer using a broker because I feel as though they are able to just give you more options. It's not even just a feeling thing, but they're able to shop around for you, so you don't have to go to different financial institutions yourself looking for a mortgage and trying to find what the best rate they could offer you based on your unique situation. So if you're using a broker, you're literally giving all of your information to one person and they go and do the shopping for you and come back with the best offer for a mortgage for your specific situation. So looking at the different factors that would need to be taken into consideration, like your income, your credit score, the down payment that you're going to be putting in, and so on and so forth, I just preferred working with a broker because it made me feel like I am actually getting the best of what's available out there for what I am bringing to the table as someone who's looking for a mortgage. You can go to a bank, as I've said. So if you have a good relationship with your bank and you want to use your bank, that is definitely an option that you can go for. One of the things that I would say I don't prefer using a bank for is because you're literally just going to one institution. They're not going to tell you, hey, you could get a better offer if you go to that bank or if you go to that financial institution, because whatever advisor you're speaking to, they have their metrics, they have their goals. So if you qualify to buy through that bank, whether you're getting a good deal or not, they are going to present to you what they present to you, and you have no way of knowing whether there was something else that was better in the market. And I honestly don't feel as though specific bank advisors are really going to be looking out for your best interest when it comes to finding the best mortgage rates, the best everything. It's really going to be about the bank and the best interests of the bank. That's just how I look at it, because that specific person is just working for that one bank and they're trying to close deals for that bank. So I opted to use a broker. You can look into both options and see what makes the most sense for you. We've purchased a home homes before we've moved to Canada, and even then we didn't just go to one direct lender and just take whatever they gave. And the other portion of using a broker that I think is a perk, rather than you going around to shop for different mortgages, is the fact that your credit score gets impacted by the number of hard inquiries you would have against it. So if you would go by yourself to different financial institutions, you really would do damage to your credit score. But if you're using a broker, they work their magic in the background, and you don't have to have not a million, but a couple of inquiries into your credit score. So that's another perk. But those two options, they exist. Look into them and then see what makes the most sense for you. Now, before you even get to that point where you are reaching out to a bank or a broker, there's a couple of things that you need to be looking at and thinking about to make sure that you have all your ducks in a row. So when they're asking you for certain information, you have it ready and everything is just in order and ready to go. So the first important thing I'd say is your credit score. You need to make sure that you are somebody that has good credit. This is not to say if you do have bad credit, you wouldn't be able to get a mortgage. You might just not qualify as easily as someone who has a good credit score. And I'll go into the numbers in a second of what you should be aiming for. And this is also, as I said, just based on research that I've done, things that I've read up, going through the process. So if you want to give yourself the best shot at getting finance a bit easier and also getting access to better rates for your mortgage, it's advisable that you work to get your credit score to 620 and above. Now in Canada, credit scores, it's a score that looks at your financial standing and it ranks from 300 to 900. The lower you are, the poorer your credit score is, and the higher that number is, the better your credit score is. And it means you would easily get financing for different things that you would be looking for if you have a higher credit score. Now, if you need help in figuring out how you actually build your credit score, I do have a video that I have added the link to the description of this video for, or you can go to the Money Corner playlist on the channel to find that video, watch it, and then implement the things that I shared on there. So as I mentioned, at a very bare minimum, 620 and above is what you should be aiming for to give yourself a good shot at getting that financing approved and getting decent rates. Now, if you want to make it even easier for yourself to get financing approved and get access to lower rates, aim for a score that is 725 and above. So 725 and above, you're putting yourself at a very great position to get a number of options that would make it make sense for a lender to want to have you as a client, because the most important thing for them is that they're gonna get their money back. If they are giving you this loan, they want to know that you are someone who actually can make payments on things that they need to make payments on, and a mortgage is a very huge one. So the higher your credit score, the more they're able to see that you are very likely not someone who's going to default on your payments versus someone who has a very low credit score, because that typically means they're not able to manage their finances very well. So your credit score is important, and make sure that you are building up to a point where you have that good credit score and you're ready to go through the process of actually buying a house. Now, the next point I want to talk about is your income. If you are self-employed, they usually require you to have at least 2 years, like be able to show 2 years of income from your business. And then if you are somebody who works, and for both of those, whether you're employed or you're self-employed, you need to show that you have been paying your taxes. So make sure that you're in good standing in terms of how you're paying your taxes. And then if you are employed, you also need to make sure that you are not on probation. So if you know that you're going to be buying a house, or you're planning to buy a house in the next month, the next 2 months, 3 months, don't switch jobs, because you'd be making your life difficult, and you would likely have to wait until you're off that probation period. So that's something I didn't know like before starting this process. And then the next thing that I want to bring up, which is also something that I found out going through the process, is if you have variable compensation. So you have your base pay, and then maybe you have commission or an incentive bonus that you get every month or every 3 months. You have to be working for the same company for 2 years for them to take those amounts and average it out. So for the lenders to consider that variable compensation that you have, they would need to see how much you have made in 2 years at the same organization. If you haven't worked for the organization that you currently work for at least 2 years, they're not gonna look at that amount likely. So you would only have to rely on your base salary for purchasing the house. And I mean, I get it. It's like one of those things, I totally get it, because variable comp is exactly that. It's variable. So just because a company says you are eligible to get X amount of money per year as variable compensation, it doesn't necessarily translate as you will actually get that amount. You could get more, you could get way less than that. So they typically want you to show 2 years of that variable comp from the same company. So if you have worked for other companies and it had that variable comp portion, they're not looking at the previous 2 years and other companies that you worked for to try average that out. They want to see it for the specific company that you would be hired under. So just keep that in mind if you do have variable compensation that you would want to use towards buying your house, or you would like to be considered, and have that conversation with your broker or your bank, and they can help you understand your standing and situation a lot better. And then from an income perspective, if you do have any additional income, say for example, you're here in Canada and you get the Canada Child Benefit, that is something that you can submit. If you have kids and you're getting the Canada Child Benefit, you can submit that as part of income that you get. So every single dollar counts. So whatever income that you have that you're paying taxes on, if you have a business on the side and you've been running it for 2 years and you're paying your taxes, that's income that you can also submit as part of showing what you earn to be able to get that mortgage from lenders. So the next point that I want to talk about is the down payment. Now, at a minimum, you need 5% down payment to be able to purchase a house in Canada, and that depends on the price of the home. If your home is less than $1 million, you have to pay 10% for the portion that is above $500,000. So if your home costs $850,000, for the first $500,000, you would be required to show or have 5% down payment at a minimum. And then for the $350,000 that's above the $500,000, you would need to have 10% of that amount, and then combine these two amounts, and that amounts to your down payment. For anything above $1 million, you need to show a minimum of 20%. And these are minimum numbers. You can go higher if you have that money and you want to also increase your chances of getting that financing. You can have more than 20%, but these are the minimums. And as I always say, if you've watched any other video on my channel where I'm talking about Canada, processes for doing different things, whether it's coming here right after you get here, or you've been living here for a couple of years, or maybe for your entire life, Canada.ca is the website where you're going to find a lot of information about practically everything, I would say, that you need to just live in this country. So the down payment portion and the home buying process is something that you can read up on that website. And you can see on there that they give you examples based on a home, that if you buy a home that costs X, this is how much down payment you could expect. And if you pay that much down payment, your overall costs for owning that home would be X, versus if you're putting in, say, 20% instead of 5%. So I very much encourage you to check out the website. I will link it in the description on this video. Now, one thing worth noting with the down payment, if your down payment is less than 20%, regardless of the cost, so if you would be buying a place that costs less than $500,000, and you're not putting in 20% at a minimum, you would be required to pay a premium, like some insurance that is gonna protect the lender, to help them have and feel assured that should you default on your payments, they would be covered. So if you're putting 20% down and above, you wouldn't need to pay this amount, this premium amount, which is different. I can't give a specific figure and say you're going to pay X amount on this premium, because it depends on the purchase price of the home that you're buying, how much down payment you are putting down, like your risk in general. They look at a lot of different factors pertaining to your purchase, and then they'll give you a figure for how much that potentially could be. But you can get examples online on what you could expect to get depending on the price of the home and the down payment that you would be putting in. Now, it's also worth noting that if you do put 20% down and above, you could still have a lender require that you have this insurance, this premium added to your entire mortgage amount. And the amount for the premium insurance can be added to your entire mortgage. So it's not money that you would have to take out of pocket if, for example, they say you have to pay $20,000 or whatever, $15,000 for that premium insurance. Now, if you are putting 20% down and above and they still require this, it could be because you have a very poor credit score. So that goes back to the point where I made the very first thing I said was very important, to just make sure that you are in very good standing when it comes to how you're managing your credit and where your credit score is. And now that you know from a down payment perspective what is expected from you and where to see or find the latest information in terms of how things look from down payment requirements, it's important to know that there are specific sources where your down payment can come from that you should be aware of. So you can get your down payment from your savings. Maybe you have a savings account, or you're saving your money somewhere in a bank or a financial institution. So your savings, your investments, maybe you buy stocks, whatever investments that you have, or you're going to sell an asset. So there's something that you're going to sell and you're going to take that money and then use it towards your down payment. Those, I think, are very easy to prove out, because for every single amount, it doesn't matter if it's $1,000 towards $80,000, you have to be able to have paper trail and prove where that money came from. So you say this amount came from my savings, I sold these shares, or I sold this, but this came from my investment, or I sold this asset. Maybe you had another house and I'm taking that money and I'm putting it towards my down payment. So everything needs to have a paper trail, and I think for those ones it's relatively easy to show where that money came from. Now, another option you have is a cash gift. So you could get a cash gift, and that's something that you put forward as your down payment, and you would need a letter from whoever is gifting you this money to show that this is a gift and they are not expecting you to repay that amount, and they also need to state where those funds came from. They may be required to submit their bank statements, to show that this money came from their bank and they're sending it to you and whatever, but they would need to also have paper trail to show where the money came from. Maybe it's from their savings, maybe it's from their investment. And another important aspect of the cash gift option, they typically require it to be from immediate family. So it could be from your parents, it could be from your grandparents, it could be from a sibling. Those are typically the people that they want to see the down payment come from. And so if you are going to be accepting a cash gift as part of your down payment, just make sure it's coming from an immediate family member to make your life easier. Because if you get to that point and you're like, oh, actually it's a cousin or somebody, the lenders will look at and say, this is a very distant person, or maybe you say it's a friend, a very close friend who feels like they're a sister. You literally could have to prove your relationship to the person that is giving you this amount, whether it's through birth certificates or whatever else. But Just make sure that you've read up and you understand all the requirements when it comes to using a cash gift as a down payment. Now, another option that exists for your down payment that you could use is what's called a flex down. Now, the flex down option, you could potentially be putting in, say, 50% of the down payment from your savings, investments, maybe the sale of assets, and then you take the other 50% from a credit line. You have some form of credit line that you have access to and you can get funds from there and use it. That is an option that exists and you can use. You just have to make sure that from a debt ratio perspective, the numbers would still make sense. So if you would have to pay for this mortgage every single month, and now you've taken this huge amount of money from a line of credit, are you still able to make both payments and it makes sense to the lenders? And one of the important things about using the flex down as an option is that your credit score needs to be a good credit score. You have to have really good credit for you to even consider this one as an option, because the lenders need to see that you can actually manage repayments of anything that you're supposed to be making payments on. And again, it goes back to that point of how important your credit score is, and you should be making a conscious effort to actually build it up and maintain it at a particular level. Now remember, as I said, for your down payments, whatever your source for your down payment is, you need to have that paper trail to show where that money is coming from, because they're just trying to avoid you overcommitting yourself and then end up defaulting on your mortgage if you're getting this money from loans that, I don't know, you're not declaring, or maybe you're borrowing money from a friend and now you have to pay back your friend and you have the mortgage as well, things like that. Like, they're just trying to cover themselves in terms of making sure that they're giving money to someone who actually is going to be able to pay that money back. Now, if there are other options for down payments that you are aware of and you want to share, please drop them in the comment section. I think it would help somebody make things happen for themselves. If you have any other piece of information or something you've learned, maybe going through the process yourself, or you know someone who has gone through the process, and there's something that I haven't mentioned that makes or could make life easier in terms of helping someone get that mortgage to finance their first home, please do share it in the comment section. As I said, I'm sharing information based on things that I've learned going through the process, because there's things I learned that I wasn't aware of and I was like, okay, interesting. So I think it's just good that you know and you have this information well before you even consider or think of going through the process. If you know you're going to be buying a house in the next 2 years, next 3 years, you can start making and doing all the right things to put yourself in that position where when that time comes, you're ready and you don't have any hassles or trouble or unnecessary stress when it just comes to securing yourself a lender that's going to give you that money to buy a house. So now, with all of these other things sorted, this would now be the time to approach the broker or the bank that I spoke about at the beginning, and then figure out what you qualify for. And then when you know what you qualify for, it's time to start working with a realtor. The realtor is going to help you shop around, look at different homes, and then if you are interested in a home, the realtor is going to help you put an offer in to buy the home that you want. And if your offer is accepted, then you are gonna go through the process of eventually working with a lawyer who's gonna help in transferring funds from your lender, your down payment, to your seller, and then having the land, the house, transferred to your name. So you'll work with lawyers on that. And then typically when you're working with a realtor, you wouldn't have to pay them out of pocket. They will get their commission when the house closes, and the different brokerages that are involved in that sale are going to sort things out. So you wouldn't have to pay anything out of pocket to work with a realtor. So I highly recommend. I don't see a reason why you shouldn't work with a realtor, because they have a lot of experience and can give you tips and tidbits on what you should or shouldn't do and avoid. And then when you are putting in that offer for your home, I would also recommend that you do a home inspection, because you don't want to find yourself in a situation where you've just purchased a home and then you find out that there's something very wrong with it, massively wrong with it, that needs you to, I don't know, take out like 50,000 or 100,000, just costs that you were not expecting to have to put into the house. You can look at a house and see different things here and there that you'd like to change, but it's really maybe more just cosmetic type of things and not problems with the house that, you know, can eat into your budget, but things that you could move into the house and not have to change if you really didn't want to do it at that point. A home inspection is not looking at those types of things. It's not looking at like, oh, do they have a carpet? Do they have this? They're making sure that there's no structural damage in the house. They're making sure that everything works, from your plumbing, your furnace, your heating, all the major components in that house, they work. So, and the roof, like they'll climb into the roof, they get into all of these different spaces just to make sure that you're not going to be faced with things that you end up having to pay for that you did not expect, and then the home ends up costing you a lot more than what you would have expected. So doing a home inspection and putting that as a clause when you are putting in your offer, I would say is something that you should consider doing, and you'll speak to your realtor and they will let you know what your options are and what the different clauses you can put in are. Now when it comes to the lawyers, you have to pay for your lawyers out of pocket. So that's not an amount that's going to be covered by the brokerages or anybody else. The cost of the lawyer who's going to be helping you with your closing, you will have to be able to pay that amount from your own pocket. And it's part of the costs that you should really be thinking about, that the lenders also want to see and know that you would have. So when we get to the closing portion of the house, they want to know that you don't now have to go take out a loan to pay your lawyer just to close on the house. So that's money that you need to make sure that you've accounted for and you have as well. And then the last point I wanted to bring up is land transfer tax credit. So if you are a first-time home buyer, there is a land transfer tax credit that you could get, and that amount just varies on where exactly you live in Canada. So that is something that you can search to read up on online depending on the area that you are in. The land transfer cost is an amount that would go into your entire closing costs. So you need to know what your land transfer costs are going to be, what credit you're going to get, and make sure that this is money you're not going to have to go borrow again. Because if you're going to have trouble closing without having to go borrow that amount, lenders might pull back and say, okay, no, we don't think we want to close this deal with you. So just make sure you're looking at that amount as well. You know what it is and the credits that are due to you, so you have a clearer picture of every single amount that you would have to pay. Whew, we spoke about a lot of things. I spoke about a lot of things, from your credit score, your income, your down payment, sources of your down payment, land transfer credit, so many things that you need to be considering. But I hope you found the video useful. Please give it a thumbs up. It helps the YouTube algorithm, as you've probably heard a number of YouTubers say. If you think that somebody this video would help, please hit the share button. Sharing is caring. Send it to them. And if you haven't yet, please do subscribe to the channel. And I'll see you on the next video.
Thank you for watching.